talk about the topic of redefining normal. As you would have gathered from my introduction, I am from the investment side. I deal with markets as they are understood: stock markets, equity markets, private markets. And that's what I'm going to talk about. What is normal out there? How does redefining happen? And maybe a few pointers of what could be of interest to people who are not even keen or to pursue a career on the equity side, what they can take away from there. So let's kick this off. So just understanding the concept of market, it's exchange. An exchange of an object for another object. Conceptually, you need two people to make an exchange, and you need two objects. I have something that I value, you have something that you value, but both value what the other has more, and therefore the exchange takes place. When multiple people are exchanging objects, that's the marketplace. Now we introduce the concept of money. Money is a store of value. It is also measure by which we can exchange objects and take something today and buy something else tomorrow. So it helps facilitate this. Actually, I should not look that side because I'm very seriously looking. People are very serious out there. So money is a medium which enables you to exchange any object. Then you have the concept of credit. You can borrow, you can pay over a period of time and start using the object today. Obviously the concept of EMI. You can start using a car immediately, pay for it over a period of time. Then there is the concept of asymmetric payoff. You pay a small amount today, but like a lottery, you can win a jackpot. So there is a concept of asymmetry. So these are all basic fundamental concepts that are part of market. The difference between market and marketplaces: in marketplace, there is just exchange that is happening. In a market, multiple people want to buy and sell the same object, and the difference in value that they ascribe to that object, that is what gives the price. And that is what happens in share market when multiple people want to buy the same goods. That's why I took some time on this slide. Now that we have come to markets, markets can be rational. Oh, we'd love to have that happen. They have to be rational, means they will be proportionate, which means a positive event would have a positive reaction and a negative event would have a negative reaction. They have to be proportionate, which means that suppose a company misses its earnings by 5% and the stock comes down. That amount should be the same as if it was making its earnings by 5% and then stock price goes up. So they have to be rational. So these are the two concepts out there. They have to be directionally same and they have to be proportionate. But unfortunately, market also has mood. It has exuberance. When it is feeling happy, then everything is rosy and people are willing to pay higher and higher price, usually for a financial benefit, but sometimes just for the heck of it. And the reason why I'm using this example is, if I buy a painting which till last year was costing $1 million, but today is costing $20 million, I buy it today, I might or might not have profit, but I am buying it because there is some emotional satisfaction for me. And sometimes they are absolutely downcast. Even gold, you would have seen as an up and down. People don't value gold all the time. Today is bad times for diamonds. Everybody is saying lab-grown diamonds have come, so real diamonds will, should not have any value. 3 or 4 years ago, that precious ring that was bought for, a couple of lakh of rupees, today you can buy it for 20,000 rupees. So value also changes, and today the diamond market is downcast while the stock market is up. This what happens when markets redefine themselves. They change the data, they change the measure. If I talk about stock price, a 100 rupee price you might see normal because it's been there for a long period of time. Then it goes to 110 or 120. You say, okay, fine, this is now the stock is getting higher price, it is becoming bullish. But if the same stock was 1000 rupees and it went up by 20 rupees, the same delta, absolutely, 20 rupees, it's nothing. On a base of 1000 rupees, 20 is nothing because the datum has changed. So this is why when the markets redefine themselves, there is some critical measure that gets changed. It is not as simple as this example that I quoted about 100 and 1000. It is more complicated than that. But this change is what redefines the normal in the marketplace. Therefore, a moody market, not a rational market, a market that redefines itself over a period of time. You can do two things with it. You can either be a disciple of it, which means a follower. When everyone else is on the bandwagon, you also rush in. Or you can discipline the market by saying, no, I will be unique. I have my system. I have studied equity analysis. I know how to read profit and loss accounts. I know the industry dynamics. I know the macro. And therefore, I will discipline this market. You can discipline the market or you can be a disciple of it. The choice is yours. Now some history. I wanted to set the base of what we were talking about prior to this slide. And now we will talk about how BSE Sensex, as a measure of equity markets performance, has performed since 1991, and how and why various things have happened that have caused the market to be exuberant, the market to be redefined, and specifically a few instances where the markets have crashed, and therefore things have sort of come back to normal emotionally, but never in absolute terms. So the first circle is the first bull market that I saw. This is the early bull market of 1990s. 1991, we had a budget which was called the liberalization budget. I hope you can hear me because when I talk like this, the mic is better, but I can't speak like this. So I hope you can hear me. So 1991, we had a budget. It was called the liberalization budget. Suddenly licensing was abolished, and the political events set tone for markets to be expectant of something better is going to happen. We didn't quite know what, but we were certain something better is going to happen. Then the next round happened, which, as you can see, is the second part, little bit vague here, but the index is going from roughly about 4,500 to 5,500. So remember what had happened last time. We had said liberalization has happened. We had said that price to assets is the right measure, and then the market collapsed. When the collapse happens, the old things go out of the window. Markets collapsed. Another feature that is common for both these markets was, for a certain period of time, brokers were heroes. Each phase I will tell you who was the hero in that market after the event happened. So in this case, brokers were heroes. And the next event is, let's say, post 1995 to 2000, 2003. IT story is well known, but like there are goods, there are bad. But important thing that is happening from equity markets is mutual funds in private sector had started in 93, starting to gain scale. That's one. The second is National Stock Exchange started in 1992. More companies getting listed there. National Stock Exchange is a completely digital stock exchange. No trading physically, no settlement physically. Everything was digital. You buy something through the press of a button on a computer screen, you transfer money digitally, and you receive stocks in your account. So that anomaly gone. Mutual funds came in. They said we need clean accounts. So suddenly all the hera-pheri about accounts gone. You need to close accounts in a certain period of time. You have to have them in a standard manner, audited by one of the large accounting firms, and present the clear picture including cash flows. And then of course gradually this system of declaring half-yearly results, quarterly results came in. Equity analysts gained prominence with the information coming in there. Now you had the ability to analyze. The theory of stock analysis was always there, discovered in the US and then adopted for India. But the equity analyst could now call out that this stock, even though it is IT services, is better than the other stock, even though both are in the same business. So stock picking becomes important as compared to style investing. Who are the heroes? If you look back and look at an Economic Times or Business Standard of those days, you will find that fund managers are the heroes. This is the first time fund managers became heroes. But what is happening within India is that the government has started, for example, the National Highway Program. The telecom sector, mobile licenses were privatized and mobile is becoming common. But economically the market got the cue. Financial markets embraced the shining theme completely. Enterprise is an example. There was a new generation private sector bank which got started, valued more than State Bank of India by the end of the bull market. Clearly on the exuberant side. And then, of course, things were happening on the side. What was happening? Interest rates were going up. Government was borrowing more and more to spend on various programs, and gradually there was only a limited supply of money. Interest rates went up back to from sub 6% to somewhere around 9 to 10%. In the international market, they had their great financial crisis, went up. All these leverage acquisitions meant that companies started going bankrupt. Similar thing had happened in real estate, and the markets came down. And then the sideways grinds. 15,000, around 15,000. 2008 to 2013, 14, market doesn't do much. So here, as I was telling you, wind turbine companies and some new generation financial services companies, even though they are discredited, what has come into vogue is consumer companies because they are free cash positive and they are still growing. So there are companies of in two-wheelers. High-end motorcycles, for example, starts going up. Even FMCG companies get a large array of their international products into India because Indian middle class is becoming bigger. Their turnover becomes bigger. After a long time, Maggi turns around. And Maggi has, Nestle has written articles on that. So suddenly you see sector rotation has taken place, new sectors have come into place, one of them is FMCG and consumer durable sector. But the market appears that it is at the same level. As an individual, you could have made money by being in the right stock. But at Sensex levels, things are up. So 2013 to roughly pre-pandemic, 20. Decent uptick, 15,000 to 40,000. In terms of scale, market capitalization, everything, it's now when each bull run, the accretion to market caps is in trillions of dollars. Most importantly, the digital rails are established. So now you can do transactions very, very differently and at a much lower cost and at a much higher scale. Private sector did the big of the VC funded businesses scaled up, and the famous acquisition by a large US corporation of one of India's largest marketplaces, digital marketplaces. And this is the first time, otherwise this acquisition of India-based consumer business funded by venture capital was always $50 million, $100 million. Foreigners have come and gone, always. This is the first time a $1 billion transaction has taken place. And then, of course, the NCLT provisions. This is where existing businesses, even the Tatas, have bought companies. Now we are in the present. 40,000 to 80,000. Today, I think this is the latest chart, 78,925 on 8th November. What is the present mood of the market? Present mood of the market is, okay, we have seen good times, but we have seen better times. Nothing to worry about, but yeah, kind of, I'm okay. I'm not super excited. I'm not downcast. Is economy growing? Is technology radically changing? Now, the only time I have seen technology make a big difference in Indian stock market is when I talked about the NSE example and said that settlement became real time, prices became real time. Otherwise, technology is great. You can write reports much faster, much better after hearing an earnings call through ChatGPT. But is it making the market better, superior in any manner? That I don't know. But technology is definitely changing, and it can give me new places where I can put my money. Maybe it can give me an interesting story. And you can see that if you are following the stock market, that there are businesses with no profits or very minimal profits trading at over 100 times, 150 times sales. And that is because of the fundamental belief that one, technology moves only one way, and that is forwards. Technology moves only one way, and that is cheaper. And ultimately, India is a large country. Anything addressing the Indian consumer has to account for the 1.4 billion people that we are, with increasing purchasing power. And then finally, what is the measure by which you would use to value these stocks? So everything has been done. I mean, now you are measuring on price to sales. We talked about enterprise value to EBITDA. This market is price to sales, because there is no other measure. The only real thing about these businesses is that there is a price and there is a turnover. Below that, things are not clear at this point of time. So, in this construct, my thesis is that the Indian consumer, and Indian consumer means all of you in a few months going into the job market, becoming the upper middle class of India, you will decide what is going to happen to this market with your behavior as consumers. On the consumer side, this is how I think that consumers have changed. So 1990s is, at my generation. First get educated, then get a job. Yeah. And you get a job, you are a lifer. My measure of success is I become CEO of the same company that I started as a management trainee after my MBA. I mean, you can look back interviews, you can see a lot of such interviews, people saying with pride that, you know what, this is the company I started off as management trainee. Workplace is fixed. You go to office, do your work, but when you come back home, you are home. Then the three things that you do with your money, one is you have holiday, but you go to your hometown, you meet your parents. That's the concept of holiday. The guilty pleasure is taking some time off. My routine is such that, if I'm doing nothing, maybe watching a movie, a big thing, that's my time off. And when I take loan, I'll only buy a house. You should buy an appreciating asset. So even my father would tell me in very stern voice, which I imbibe totally, that son, only take loan when you are buying a house, otherwise don't take loan, too much high interest. And who are you? This changed in 2005. Now, education, but continuous education. People started taking this stamp of, Harvard Business School, like I have taken advanced management program. Thank you for saying that. that I am graduate. I am not a graduate of Harvard Business School. I have a certification by Harvard Business School in Advanced Management Program. Ambition, higher, is bigger than loyalty. Changing jobs to get ahead, okay. Lot more travel now because you can see private airlines have come, much more easier to travel. Things like that. Guild trip is 5-star. It's very, I mean, if I have to eat out, now these restaurants and all are set. You go to a 5-star. That's how I want to celebrate my birthday. Loan, house is okay, but car is also okay. Now, car is also defining in some way my status in life. Who am I? I never lose touch with my friends from college because we are all networked. There are frequent alumni get-togethers. And of course my friend and my family. Family, colleagues, friends. All this is identity. Identity is where I work, my network, and my family. This is the most difficult, and I am out on a limb out here. You guys know much better about the 2020s consumer. Education is now continuous. I mean, even when I was asked to give this talk, I looked up videos of TEDx speakers to figure out some tips. Education. You go for a friend's wedding, you learn a few steps. Not like our times that everybody goes, gets up and start dancing and making a fool of themselves. Today people do serious or some kind of choreography. And like this, gym with a trainer. I want to learn, I want to go to Maldives, but only after I have learned scuba diving because I actually want to go to Maldives. So, very different. There is no work-life balance. I mean, the people want work-life balance, but work and home are so mixed together that it's one seamless entity. You may work for 5 hours, 2 hours homework, and then 3 hours work, and then, all these things. I can't do it. Where are you spending or likely to spend your money? On experiences. When you go for holidays, experience, guilty pleasure is luxury items. Specifically something that can enhance your digital identity. And unfortunately, the cost of education has gone up, cost of many things have gone up. So loans for education, loans for holiday, loans are reality. You're doing your SIP at the same point of time, and same point of time you're taking it. Digital friends, digital identity, as I said, as important as anything else. So, just coming back, just remember when you look at the market has to have a reason to go up, that's the move. It has to have the money to go up, that is the money supply, that is what it will take it up. It has to have a measure by which it will measure the assets, the stock prices. It can be price to assets in one era, PE to growth, coming back, price to sales, or digital market potential. And finally, remember, money chases performance and performance chases money. What I mean by this is that once the market gains momentum, more money flows in. So you just have to have enough salience in a new idea that people start noticing, which is performance. And once that performance comes, more money just starts coming in. And if you are in an asset management business like mine, once you have performance, once you have made money for your clients, they will give you money. Performance chases money. So money chases performance, performance chases money. Thank you very much.